I've flipped after the banking bailouts to a buy the dip mentality, a DCA mentality, whereas I had been a full defensive mode mentality before. And that to me was a change.
Today I interview crypto expert Elliot of EllioTrades. We talk Bitcoin versus Ethereum, what's the better investment? Top altcoins besides ETH, what's Elliot looking at? Of course, we do an ETH price prediction, but before all that, Elliot, what's your general view on crypto today?
My general take on crypto is, even though we've seen some pumps and we have seen some light here, it's not all just been down only. There's been some positive months, price action wise. It's hard to deny that it feels so 2019 in the way that the sentiment of the community is very, very negative. And I feel like that is just a symptom of the bear. I mean, we met and became friends in 2019. And at that moment, there was pretty much no real optimism left in the room towards altcoins. And it was very much so people were just didn't believe that the tech and the narratives and all these things would play out. And, you know, looking back, it's hard to deny that staying optimistic sort of as people capitulate and as people really get over it and really start to leave the industry is one of the key sort of defining characteristics of people who do well in crypto. And so I've sort of taken some of the tea leaves I've been reading and some of the sentiment analysis, and it's made me excited because I promised myself on the second go around in this bear market, I wasn't going to fall for it again and lose my optimism, my excitement. And that's where I think we are, is where even though there's been a bit of pump, like the negative news, the overall lack of just sort of bullishness in the market in your favorite project, whatever that might be, that just wears people down. And eventually you see people jumping into sort of quick fix stuff like meme coins, which I know we'll discuss at some point later. But it's a natural cycle. It's not the first time this has happened. It won't be the last time. It's just how the market grinds you out of high quality stuff and eventually sort of pushes you into low quality stuff, and the money transfer to the patient long-term hodlers takes place.
Dude, are you worried about macro? Because Bitcoin's ticking along as it should, but do we have more to come with this banking crisis?
Well, so the real question is, with macro, what matters? And the thing that I think is most important is liquidity in the markets. And so what we saw with the banking crisis is that the Fed is not only like raising rates, but they're removing liquidity. And that lack of liquidity is causing cracks to show. We have a debt crisis, right? Where the banks, everyone's underwater on debt. And a lot of these companies have issues with their balance sheets. And not all of them are going to be able to weather this storm because when you give people free money, well, you get stupid outcomes usually, to quote Stanley Druckenmiller. And we've given a lot of free money for over a decade. And then we decided to take all the debt in the system and make it really expensive. So that's a very, very tough situation to be in for the banks and for a lot of companies. Warren Buffett came out yesterday and he essentially said in so many words, yeah, we're waiting for an amazing company to call us and just say, we can't deal with it, and we're going to buy them out at a fire sale. And so that's what like the big investors are waiting for, these high quality, businesses to essentially go under for not really fault of their own, but because of this changing environment. And they want to pounce on it. They smell the blood in the water, and they want to get a good deal. And so that's how the big boys are operating. And it's really a crisis created by the Fed that the Fed will solve in the way that they know how. So am I worried about macro? I'm actually quite enthused by the way macro is going, because I think we've seen a little bit about where the floor is with where they blinked on the banking crisis. I don't think we can go too much lower than that in liquidity. So when you look at like the total money supply out there in the world, you saw it like bounce up like crazy when they did the banking bailouts. That's what I think Bitcoin responds to more than interest rates, more than any of these other metrics. Bitcoin is a measure of like the total amount of money and liquidity out there in the markets. And I think that we've seen kind of the floor there. So as we go and start to revisit the lows, if that's where we're headed, I've flipped after the banking bailouts to a buy the dip mentality, a DCA mentality, whereas I had been a full defensive mode mentality before. And that to me was a change, right? I'm don't have a crystal ball, but that's my plan. And I'm planning to slowly accumulate now over the coming weeks, months. And, I'm prepared to do so kind of on through 2024, though I do think that, we should be seeing the market structure change significantly by then. However, I don't know. We're being told that, this market asset bubble is totally different. All these, legendary investors are saying they've never seen anything like the bubble we're in. It's quite possible we're facing a new normal. But I'm a big believer that we will see the banks get bailed out. We will see credit sheets or balance sheets get fixed. We'll probably see a lot of banks sort of become a lot less banks, with bigger banks buying smaller banks, which you could argue is not great for the economy long term. But the point is, at a certain point, unless the Federal Reserve lets the entire banking system collapse, we're going to see either cheaper money with lower interest rates, or we're going to see more money printed and more money like liquidity out there in the world. Either way, it's good for Bitcoin, and what's good for Bitcoin is good for the rest of the crypto economy. And so it's hard for me to fathom an outcome where the United States would like voluntarily let the banking system collapse. It's just terrible for the whole capital markets. It's terrible for business across the world. It's terrible for our reputation globally if we let the banking system collapse. So that won't happen. That seems to me like a less than 1% chance. And any other situation, it's going to lead to devaluation of the dollar or cheapening of the dollar with lower interest rates. That's good for risk assets in Bitcoin.
So as you're watching the market, taking out your positions through 2023 into 2024, are you still more bullish on Ethereum from an investment point of view?
The short answer is yes. Long answer is that I think they are both amazing things to hold in your portfolio. I have a nice stack of Bitcoin just in case Bitcoin catches like this new gold standard narrative, which is totally possible. I'm also just really bullish. I think Ethereum is an incredible piece of technology. I think the tokenomics of Ethereum are super bullish. How much is getting burned per block as Ethereum gets utilized. I think it's superior tokenomics in that regard to Bitcoin. And I'm not a big believer that like Ethereum is vulnerable to securities laws. I think that's a big like concern for a lot of Bitcoiners is, Ethereum will be called a security. It's pretty clear to me that it's not, and the CFTC is sticking up for it, and a lot of different organizations are sticking up for it. So with that out of the way, you could argue that Ethereum won't work for mass adoption, that it's too expensive and slow and all that stuff. And that might be true for like video games or certain pieces of technology, but it's essentially the gold standard for decentralized compute and block space for building dApps and for sort of, I guess, outsourcing decentralization. I believe strongly that Ethereum over the next, decade plus is going to head towards a six-figure valuation. And who knows, it could happen sooner or later. But that's sort of my baseline is I do think that Bitcoin is headed towards $1 million over time. I think that Ethereum is headed towards 100,000. And if you do the math right now, that's more percentage gains sort of available in ETH. And then at that level, you can stake your ETH for a 5% native yield from the proof of stake consensus mechanism. It's just a really, really nice system. And so, yeah, for a lot of reasons, I love my ETH. It doesn't mean I don't love my Bitcoin. They have their place in my portfolio. But for people, I think, looking to multiply a little faster, I think ETH will give slightly higher returns in the short term.
Let's say you have $1,000, you put 400 into Bitcoin, 400 into ETH, you have 200 left. What other altcoins could you potentially look at?
So I have 800 deployed. Is that what you're saying? And I have
correct 200 left.
Yeah. So I believe that alternative L1s, much like they were written off, like the Cardanos and other coins like that were written off last cycle. I believe alternative L1s will have their day in the light again. Because as Ethereum gets congested, which it will, it becomes totally unusable for the average user. And so you imagine, in the next run, millions of people flood in. They're going to look at ETH and go, I can't pay, $300 for a transaction fee. Whales will still do that because there's tons of value in doing that because there are so many precious assets there. But the average people will flood to L2s and alternative L1s. So those narratives will become very, very key. So I'd be looking at L2s, alternative L1s, and just studying those ecosystems and looking at the top players there. And of course, during the bear markets, you're seeing fairly depressed prices across those asset classes. And so from the bottom of some of those, I believe you'll see some pretty astronomical growth to the next peak of the cycle. I also think, DeFi is a little harder because it's become so diverse. There's so many projects. Gaming's hard because there's a lot of projects. But I'm a big believer that that gaming will be obviously the tip of the spear for consumer adoption. And the right gaming projects will do really well. But yeah, I mean, I probably think the easiest thing to do if you're just a casual crypto person who just wants to sign onto the exchange and pick a few coins and see what happens. I think beyond the Bitcoin ETH, I think you want to look at alternative L1s and L2s, and that's a Ethereum L2s to be specific. And that's a good place to start sort of getting a little deeper.
And what's the status of your crypto game? When can average people play?
Yeah, so we're coming into open beta. And there's just an absolute metric ton of updates we have coming a little bit later this year. And, one of the things that's really great about the bear market is being able to get products and services ready for mainstream adoption, and to, not have such an overwhelming pressure of super rapid deliveries. The way that I frame it right now is, in the end, what matters is the next time that crypto sort of has a mainstream moment, we want to have services, products, and infrastructure that hold and retain the weight of mainstream adoption. And it's less about rushing something out yesterday, and it's more about making sure that you build something quality. I know, just to share a little bit of an anecdote, I've talked with some of the most legendary game executives and creators in the world, household game creators, and there's a lot of excitement and building going on in crypto gaming, not just on my project, which there is, but on other projects in the space. One of the things that I think is really important to understand is as projects have success in crypto gaming, it will create a ton of interest in the sector. And I liken this to being on the App Store in 2008 or 2009, which if you had an iPhone in 2008 or 2009, almost every app on the App Store in that era ended up as a wild success because there was just so much attention and not so many options. And so as crypto gaming starts to mainstream and there's the first hit and the second hit, and there's all these players that are looking for more crypto gaming experiences, all of that attention will pour into the surrounding areas. And so it's one of those places where you can kind of stake out your claim and just wait for it to happen. Because whether it's my project or some of my colleagues' projects or people who I don't know, there's going to be at one point, I believe, strongly, and this is where I've staked my whole last 5 years or so of my career, there's going to be a moment where I'm very convinced that crypto gaming will have an explosive cycle. And it won't just be focused on one game, though there will be certain choice, super winners as there are in every cycle. I believe it'll be something that is widely spread rather, across the entire sector. And that's a really, really cool thing to understand. I call it a positive sum game of crypto gaming because one person's win does not equate to another team's loss. It's actually more likely that the other teams will succeed once one starts to succeed. And we saw the beginnings of this with Axie Infinity and then Metaverse Mania, as we've called it. You'll see that times 10 or maybe 100 on the next run.
I'm not a gamer, but I had a chance to play your game in maybe the closed beta, whatever you call it. I had a blast. Social deduction, more fun than I ever would have thought. I'm going to put a link to the website down below. I want to have you, we're going to talk about meme coins, do a whole episode just on meme coins. I know you have opinions, but final question, Elliot, a fun one. By the end of the year, will Bitcoin be higher or lower than where it is today?
Oh, by the end of the year, that's a super hard one. It's a super hard one because there's supposedly this recession starting right in the next quarter or so. Supposedly it might have already started. You're just hearing investors that are far more experienced than I, Stanley Druckenmiller, legends of the investing space. Warren Buffett just sold all his stocks or a big chunk of his stocks. Like people who have seen more and have more experience than I do are looking at, tremendous downside over the next few months. I don't know. So because I don't know, and because I also don't know how Bitcoin performs in the context of a recession where people expect for the Fed to fire hose money at some point, what does that mean for Bitcoin? Are the markets going to front run that? Is Bitcoin going to flash crash? Is Bitcoin going to stay at depressed prices? I don't know. I really don't know. So my strategy is not to pretend that I know, but it's to steadily accumulate. I would say that if I were to guess, we'd probably be somewhere similar to where we are right now at the end of the year. I'm not expecting for major price growth until, after the halving, if not maybe a few months after that, kind of similar to what we've seen in the past. And that would give time for there to be, a reset of some of the financial indicators that the Fed looks at and a justification for them to say, okay, inflation's down, unemployment's down or up rather. The job sector's less tight. There's less job salary inflation going on, services inflation, the things that the Fed's looking at to decide when they can turn on that spigot of money again. And we know they're going to, right? And so that to me, mixed with some time for Bitcoin to do what it normally does, which is the 4-year cycle, the halvening, et cetera, that is the sort of combination of factors, I think, that make the sort of late part of 2024 where I would start betting on there being higher prices. For now, I don't know how 2023 is going to end. And that's why I'm not doing any sort of major plays. I'm not putting in, 30, 40% of my liquidity at any one spot. I'm putting in, single digit percents of my liquidity at, repeatable moments.